Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
Boom, boom, boom. What's going on, traders? Welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske, and I have a great episode in store for you. Not only are we giving away a free Apex Trader evaluation account, but I'm going to be covering some live markets. We'll cover gold. We might cover oil. Oil's been giving us some range-bound activity ever since the whole tariff nonsense started back in February. But most importantly, the S&P 500, which is the ES, and the NASDAQ, which is the NQ. We'll go over some price levels. We might even find a live trade to take here on our stream. So keep an eye. Make sure you hit that like and subscribe button and fill out that form in the comments for a chance to win a free Apex Trader evaluation account. Now, let's get into it. I've got some slides to show you on what we're covering today and what is Apex Trader Funding and how you could profit with a prop firm. So what are prop firms, right? Prop firms versus personal capital. Starting capital needed for something like a prop firm, something very cheap. For an Apex account, I believe the 25K account right now, if it's not on sale, which there is currently no sale running, we'll pull up Apex right now. I believe our price on the 25K account with no sale is currently $167. So it's not $147. This was old. It's $167 with no sale. But if you use discount code FFEVER for Futures Fever, you get at least 50% off. So that alone, you're putting very little of your own money at risk, your own capital at risk when trading with a prop firm. With a traditional broker, you need at least, and I'm talking about even a Tradeovate, minimum $500, and that's even to give yourself just a little bit of cushion. And when you start with a low amount like that, you're really only trading one micro. When you start with an Apex account, it gives you the ability to start with minis, start with multiple micros, gives you the ability to risk very little of your own personal capital, trade on a valuation, even on a funded account, and make some money. So why trade with Apex Trader Funding? Apex Trader Funding gives traders access to funded accounts, removing the need to risk personal capital. Guys, good morning, Katan. Good morning, Ozzy. Everybody, good morning. Hope you're all doing well. Make sure you hit that like and subscribe button if you're here on YouTube. If you're here on Twitter, hit that like and share. And don't forget, fill out that form below for a chance to win a free Apex evaluation account. So Apex gives us the ability to trade futures markets with their own firm capital, right? We're not trading our own capital, but we're also not trading options or stocks. This is futures trading only, and it is day trading only. We are not swing trading any positions. You earn up to 90% of the first 90% after the first 25 grand you make. You keep 100% of the first 25K, guys. This is huge, and this alone sets Apex aside from all the other prop firms in the sense of them doing what's right for the trader and giving us the ability to take nice payouts. Yo, good morning, Jay. What's going on, man? There's zero personal liability. We could trade stress-free. There's no stress when it comes to trading an evaluation or a funded account. That's sort of one of the benefits of trading with Apex, guys, is we don't have that emotional attachment to our account. Like, okay, I opened a $5,000 account. It's my own personal capital. But if I lose $2,000 on it, I might emotionally and psychologically take a big toll. It might really mess with my mentality. And then going forward, all of my trades, I won't be able to trade properly because I'm not thinking clearly. When Apex comes around, they say, guys, that's fine. Don't be attached to the money. Be attached to your system. Be attached to the strategy. Guys, we have the one and only Peter Tuchman is going to join us very shortly. I'm going to breeze through some of these slides. It's a three-step process with Apex Trader Funding. Step one is pass the evaluation, show consistency and proper risk management. Step two is you get funded. And step three is, of course, you withdraw profits. You say, okay, I hit X amount on my 50K account, I can now take profits off the table. Some tips for each account size, and guys, we could always go back to these as well. 25K account, your trail stop is 1,500. So we're not trading a 25K account as if we have 25K in capital. We want to trade it as if we're trading a $1,500 account. A 2% risk of 1,500 is only $30. That's a bit too small of a size to risk. So we could risk 150. 150 on a $1,500 risk gives you the ability to take up to 10 wrong trades in a row, no winners in between, and then you're able to, then you blow the account. But that cushion that you're giving yourself, again, lets you disassociate with the emotional aspect of trading and the capital in your account size. 50K account, your goal is 3,000, 2,500 is your trail stop, 150K is 9,000 with 5,000 as your trail stop, and $250,000 account, guys, your goal is $15,000 and your trail stop is only 6,500. So I'd usually recommend when people get started with Apex, get started with maybe a 50K account. It's a great place to start. The profit goal is not too high and you have a nice cushion on your trail stop. So guys, let's pull up some market context. Let's actually go over last week's winner first, and we'll save some of these slides for later. I'm curious as to what Peter has to say is going on in these markets right now. Oh, I do apologize. There is currently no sale. This is my old slideshow, so I do apologize on that. Oh, no. Let's see. So last week's winner, I do apologize, guys. I had another slide up, but apparently I have the wrong one showing. Last week's winner was Derek. Guys, congratulations to Derek. Won a free Apex Trader evaluation account. Make sure you hit that like, make sure you hit that subscribe, and fill out the form in the comments for a chance to win. So let's pull up some charts. Let's pull up Peter. Peter, if you're still there, let me know, and we'll pull you up and see what you have to say about what's going on in today's markets. There he is.
Hey,
what's
buddy.
up, Peter?
How's everybody doing? Great to be here.
Doing good, man. Great to have you.
Awesome. Well, let's get busy. Let's start talking here. Let me put my phone in a spot that gives me some leeway. There you go. Okay. Can you see me?
Awesome, man. Awesome. So, Peter, I see you're live on the floor.
I'm live on the floor. I'll give everybody a quick view of what it looks like here, so you guys can see we're not copy and pasting anything. I'm actually live in the balcony at the New York Stock Exchange. Kevin, it's nice to have you. Thanks for having me, buddy.
Always.
So let's talk, everybody. Let's give a little breakdown of what's going on in the markets, right? Okay, so curiously enough, amazing that we are trading at record highs once again, right? You know, if we go over the last couple of months, right, we know everybody who's been trading obviously knows February 19th, we were at record highs. We had that crazy sort of self-inflicted economic Armageddon that sold us off down 20.8% all the way through April 19th. You know, that was basically caused all about the tariff story, right? The uncertainty, the anxiety around the markets sort of imposed on it by the administration, right? And look, markets can handle anything except uncertainty and surprises. And that whole 2 months was all about uncertainty and surprises. So we got through that, right? Now, look, the only silver lining in that massive sell-off that we had was I was not sure when we were in the depths of the sell-off in the early part of April. I kept saying, are we going to look back at this time as a time where we should have sold because it's going to get a lot worse? Or is, once again, this pullback sell-off, I actually called it a mini crash. I don't use the word crash lightly. I use it really seriously, right? I actually net called that a mini crash because it was a 20.8% sell-off over an 11-week period. That's fairly aggressive. So anyway, are we going to look back at this time as the time we should have sold because things are going to get a lot worse? Or is this pullback and sell-off just another buying opportunity like we saw in 2024? We had 7 pullbacks in 2024, right? A year that closed out the year the S&P was up 23.8% in 2024. Right? We had 7 pullbacks. We had one in April. We had one in July. We had one in August when the Japanese stock market crashed. We had one in September, one in November, and a little one in December. It turns out net in 2024, every sell-off, pullback, consolidation that we had was a way better buying opportunity than a selling opportunity. Out of 218 trading days in 2024, we had 58 record closes. That's unheard of. That's never happened before. That's crazy. We've already had 13 record closes in 2025, which is unbelievable. So after that sell-off, the only lining of that sell-off, which is an aggressive pullback in the market, was that if we can go down this much, this fast, we can also go back up if the market proceeds to turn around. And sure enough, Mr. Trump told everybody to buy the market. We had a couple of deals on the table with the tariffs. We were able to make back all the losses of Liberation Day or Independence Day, whatever it was called, in 4 weeks. So that was kind of wild and crazy that we made it all back. And now we're trading at record highs. We're approaching 45,000 in the Dow. We are at 6,400 in the S&P. Everyone's calling for a 7 in front of the S&P by year end. That's a beautiful thing. NASDAQ trading at record highs, the Mag 7. The impact on the CapEx expenditure within the AI space, right? Which is, look, let's think about it. Last week, we had a major meeting with Jensen Huang from NVIDIA with the White House talking about reopening the doors between NVIDIA and China. That's a big thing. A lot of money being put into the CapEx space in the AI sector, $12 trillion over the next couple of years. So that's huge, right? Whether you have the secondary and tertiary derivatives of the AI space, not just NVIDIA, there are a lot of stocks you should all be looking at. I know we're trading futures, but within the futures market, you've got all of these names, and AI is a big factor that's going to keep things sort of pumping up, right? So AI is a big thing that's keeping this market where it is today. So why are we trading at all these record highs right now, right? A lot of different reasons. Last quarter, we had earnings were quite robust, except that the companies were not able to give guidance. And that was one of the biggest things that was overhanging the market. What is guidance, right? Last week, you look, earnings were what happened last week. Guidance is what's going to happen next week. And so with all the uncertainty around tariffs, none of the companies, GM, United Airlines, Ford, JP Morgan, were not able to give guidance because the numbers around the tariffs were so unknown, 185%, 140%. Nobody knew it. There were boats lined up in China Harbor and empty because they did not want to take ownership of the products that were being shipped from China to the U.S. because they did not know the cost of goods sold. That was the biggest looming thing that caused that April sell-off. So we had really robust earnings, but the looming negativity and inability to show guidance was what really broke down the market. So now we are in Q3. We have solid earnings. The banks out of the gate had really great stress tests and super solid earnings, and we're able to give guidance. So that's one of the reasons I'm trying to describe to you why we're trading where we are, even with all the sort of uncertainty around the world and still uncertainty around the tariff space. While we were all focused on the war in the Middle East, a lot of backroom diplomacy was going on, right? Lutnick, Bessent, the two guys who are the financiers in the new administration, were obviously busy at work, right? This isn't a political statement. This is an economic and this is a market statement. So we now just closed the deal with Japan. The president announced that a couple of days ago. We just settled the deal with the EU, right? The European Union, one of our biggest trading partners. That's a big deal, right? We have Vietnam, we've got Philippines. A lot of deals are being done. They promised us deal, done about 3-4 months ago. We're now suddenly getting these deals done. And that's a big deal, right? So how is it that with still all this uncertainty, these markets are trading at record highs? Earnings with guidance is super solid. The banks are in good shape. That is one of the lifeblood of a solid bullish market, is when the balance sheet in the banks are solid. And the stress test, what we had a few weeks ago, shows that. So that's a big deal. Okay. Secondly, you've got $7 trillion are on the sidelines still in cash. Now, how would that be possible? Okay. So what ended up happening was a lot of the big hedge funds, a lot of the big institutions and mutual funds that were very heavy into equities at the end of last year, right? They closed out their year up 23.8% if they were tracking the S&P. Well, knowing that there was a new administration, knowing that Mr. Trump is heavy into the tariff space, they decided to go from 70-30 equity cash to basically 70-30 cash equity. So they took out a lot of their money from the equity market, and they decided they would spend some time on the sidelines to see how the new administration was gonna live out, right? So for a while, when the market sold off heavily in February, they looked really good. But when the market rallied back in 4 weeks and we got back all the losses, everybody got caught off guard. And they were not sure, is this rally going to hold? And so a lot of people got caught on the sidelines, underinvested, right? So we're seeing now, if you analyze, that's what I do. I'm a forensic broker. I'm not here to advise you on anything. Disclaimer across the board, I don't advise on stocks, but I will explain to you why the market is trading the way it is. And so what you're seeing now is a lot of sort of buying with intent, right? These people, conviction buying. When you see a market open down a little bit and then the rest of the day is beautifully trending up, which is what we've seen, a lot of intraday reversals, that is buying with conviction. People are picking their spots. They're waiting for the market to pull back a little bit, and then they pull the trigger and they buy the market. So a lot of underinvestment and catch up, right? A lot of these big funds with $7 trillion in cash on the sidelines are playing catch up. That's also supporting the market. Also, the bottom line is all that money that's being invested in the AI space is a huge thing, right? Nothing but good news around AI and NVIDIA. So that's a big thing. Microsoft hitting record highs, NVIDIA, 4 trillion plus capitalization. There are a couple of stocks that are lingering, right? Like Tesla, right? So Tesla just had earnings. It was a little bit disappointing. They missed on earnings and revs and guidance. However, what people don't realize is that Tesla is no longer a car company. It is an AI company. It's a tech company. And until the market catches up with that concept, right, the reason that Tesla was down after earnings was because car sales were down. But look, at the end of the day, Tesla is no longer a car company. It's an AI company. So when the market catches up on that, then it's going to catch up on the stock. That's why the stock got kind of beaten up. We know Apple's got just issues around tariffs, issues around other things. But at the end of the day, that's why. So we've got good earnings. We've got money on the sidelines, right? We've got, look, right now, people are buying everything that's not nailed down. They're buying crypto, they're buying gold, they're buying equities, and they're buying futures. The futures market is absolutely so robust. I know we're all here to talk about Apex, right? At the end of the day, and I know Kevin gave an amazing, as he always does, a great description on how easy it is for you all the barriers to entry are down now, right? If you were a day trader trying to figure out how to trade equities and futures and you didn't have the money to open up an account, well, you know what? It's like Christmas in July, right? Apex comes along and they give you the access. Look, they give you accessibility. They give you funding. They make it available, right, to basically enter the market, right, for as little as 13, 18, 30, 50, whatever kind of an account you want to open up with Apex, you can do it. And that gives you accessibility. I work with David Green, new partnership with Apex, with Wall Street Global Trading Academy. We are an academy teaching technical analysis. Just opening up an account with Apex, you still need to learn how to trade these markets. That's why Wall Street Global Trading Academy, WSGTA.com, and Apex partnered up last week. Big announcement. Kevin came. We were all in New York. We had a huge billboard in Times Square. Check out everybody's Instagram. It was super exciting. Did interviews on the floor of the exchange. We were here for the opening bell. We went to Times Square. We had a massive 3-4 billboards, right, to announce this partnership of Wall Street Global Trading Academy and Apex. What we want to do, there you go. It was amazing. It was one of the great days of my career, right? I could not be more proud. Kevin was there. All the people from Apex were there. Cameron and Vince and Dan and Calvin, all of them, David Green and I and our team. So we were all there. The bottom line is the partnership is about education and accessibility and funding, right? So it's a match made in heaven. So this market is here to be, look, at the end of the day, we're not talking about investing. We're talking about day trading. Day trading is, by definition, is when you take your money or someone else's money and you put it into the futures market, ES, MES, NQ, QQQ, whatever you're trading, and you make small bits of money every day, every week, every month so that you're green at the end of the week, the day of the month, right? That's the bottom line. We're here. Some people call it scalping. It is not a bad word. We're here to take money out of the market when it offers that opportunity, right? We use stop orders on every trade. We don't ever turn a winning day into a losing day. We have certain rules at Wall Street Global that makes us one of the better educational platforms because there are certain rules of discipline and consistency that are necessary to be a successful trader. Apex offers you one of the best platforms out there, right? I mean, it's amazing that, and look, and Kevin's behind it. We've got an amazing team, right? You can get your payouts when you want them. You have accessibility to the market when you need it, right? So imagine that you've got an educational platform in a very simple way. WSGTA.com. We did a masterclass last week. If you go on the link in my bio on Instagram, the Einstein of Wall Street, you'll be able to see it. It was an hour and a half talking about trading futures, talking about technical analysis. Technical analysis is the art of charting, learning how to use the charts, exponential moving averages, RSI, relative strength index, right? Basically identifying supply and resistance. That is the framework. That's the infrastructure of day trading. Okay. So at the end of the day, you need to know how the charts work, right? We'll help you do that. We'll help you set up your charts, right? So if you take Apex and you use them for the funding and accessibility, and then you take Wall Street Global and you use it for the technical analysis to learn how to trade, it's a match made in heaven. So, right now, the market feels like it wants to go higher. We don't know. Look, I'm asked all the time, is the market go up or down? And the best answer is yes. That's what markets do. Are we going to have a couple of stumbles on the way? Absolutely. But the way the market is setting up to this week is a big week. Today, we have a Federal Reserve meeting. Now, there's another thing to discuss, right? So the Federal Reserve, Mr. Trump, has been sort of, beating down the door. Even last week, he ended up going to the house of Powell, right? At the Federal Reserve, he showed up at his door to bully him a little bit to cut interest rates. Now, the question you're probably asking is, why, with Mr. Trump, first of all, Mr. Trump is not supposed to be talking to the Federal Reserve. There's supposed to be a bit of a wall there. So he's already stepping over his bounds. Not a political statement, an economic market statement. However, that's the way he plays. That's the way he rolls. He's the new sheriff in town, all due respect. But at the end of the day, the reason that the Federal Reserve Chairman, Mr. Powell, has not cut interest rates over the last number of months is a very specific economic thing, right? There's a fear of stagflation. What is stagflation? So when you have a low growth or no growth landscape and environment, which is caused by tariffs, right? Tariffs are a tax. Is a cost that is being imposed on the consumer, right? The idea behind it, it's a policy that not particularly hasn't worked for a long time, but basically it causes an increase in cost more often than not to the consumer. That impacts growth. So when you have a low growth or no growth environment, it's very hard that if you cut interest rates, what you create is stagflation, which is low growth and inflation at the same time, which can be problematic for the markets, problematic for the economy. That's why, while the tariffs have been the flavor of the moment over the last 3 or 4 months, that's why Mr. Powell has not been excited about cutting interest rates. Now, we know a lot more about the tariff story than we did back in February, March, and April. We're not going to have 180%. We're not going to have 70%. We're probably going to settle in. A lot of deals have been made across the board, and they're more looking like 10% good case scenario and 15% worst case scenario. Those are tariffs we can deal with. It is more money coming out of our pocket, but it's a lot better than what we were looking at, right? You realize that the worst part of February, March, April, Apple chartered a private plane, and put 4 million iPhones on it to try and get it to the United States before the tariffs kicked in to save money because they did not want to. You realize that 140 and 185% tariffs on China goods, your iPhone that you paid $1,000 for would have cost you $3,800. I don't know about you, but that's a lot of money for a phone. So now that's not necessarily the case. So right now we know a lot more about tariffs, 10% best case scenario, 15% worst case scenario. With that kind of an environment, okay, which is sort of better than a low growth, no growth, cutting interest rates is a viable economic tool that probably will give a little bit of gas on the fire here. And so the Federal Reserve is more likely to today in their meeting. Now, everybody should sort of be careful about trading at 2 o'clock, okay? We should also check out, we just launched a Wall Street Global Trading Academy YouTube channel. We did it yesterday. We had an amazing time. We were all talking about Apex last night. A bunch of people signed up for Apex. So check it out. Look out for David Green and I are going to be trading the markets live on Fed Day, on Monday morning, on Friday morning, on our new YouTube channel. So go check it out. At the end of the day, though, what we're looking at is if they cut rates, they're not going to cut rates today. There's virtually no probability that's going to happen. However, at 2 o'clock, there's probably going to be some volatility in the market, so be careful. That's number one recommendation. Number two recommendation is the news conference that Jay Powell is going to have at 2:30. If you've ever traded a Wednesday when the Federal Reserve is talking, it is a very volatile time. So be careful. You know what? It may be a better idea. We always recommend people to back out of the market for a little bit, right? Unless you want to put some, low bids and high offers in the future. Because what you end up seeing on the Wednesday of Fed Day is the market is going to go, it's going to look like, I don't know, O.J. Simpson's heart attack or something. DKG after the heart attack. It's going to be wild, right? No one's expecting a cut. I don't think one's going to happen. But the news conference, he's surely going to talk about when he is going to cut them. And there's a 67% probability that we're going to get a cut in September, and maybe a 78% probability we'll get one probably in November. So once the market tries to digest that kind of information, there's going to be some volatility. So that's the first case scenario. Then you've got a lot of economic PCE number, personal consumer expenditure, I think it is coming out on Thursday or Friday. The jobs numbers coming out. So there's a lot of economic data after today. Primary today is the Fed meeting, so be careful at 2 o'clock and 2:30. Then on Thursday and Friday, everybody should go check out Market Watch's economic calendar. I don't know if Apex posts one, but an economic calendar, you need to look at it. Everyone should. If you guys are day trading the futures market, and I know you all are, everybody should be checking out, be aware of what's coming out every morning, right? Yeah. Got labor numbers, PCE, PPI, CPI, consumer sentiment number. These are economic numbers that are really important because they are going to create volatility in the market. If you're day trading the futures, you want to know what's going to cause the market to go up and down, and you need to protect yourself. That's why we always talk about having a stop order on every trade. Have an amount of money that you want to make in your day. When you hit your goal, turn the machine off. Take profits when you can, not when you have to. Right? Know when to stop trading when you're making money. Know when to stop trading when you're losing money. These are important things. These are the rules that we teach at Wall Street Global. And they are really good rules when you're trading Apex and you're trading the futures market. You don't want to blow up accounts. That's not your goal. The wonderful thing about Apex is if you blow it up an account, you can open up a new one. That's the wonderful benefit of it. You're not risking as much of your own capital as you did in the old days. That's the wonder of Apex is you can formed by Apex. You can also use their funding to be able to trade the market. God forbid, this is a learning process. It's a journey, right? It's not a sprint, it's a marathon. You're here to learn how to trade the futures market using their capital, hopefully making money and getting wonderful payouts, maybe even going on to the live. That's your goal. Some people are going to do this, become a day trader to make some disposable income. Some people are going to do it for their life. Some people are going to do it part-time. That's the wonder of day trading. It's an amazing accessibility and education that you can get trading the market. So beware of the Fed meeting today. Beware of the economic numbers coming out on Thursday and Friday morning. Go check out WSGTA.com. If you want to learn how to trade, go check out, Apex if you want access to the market. Hold on a second.
That's all right. Guys, very important to keep an eye on that economic calendar.
Economic calendar is important, and you should check it. There are a bunch of different platforms that offer that economic data, but knowing what's going to come out every morning at 8:30 is super important because it is going to, if you have a stray bid or offer in the market and news comes out about economic stuff, the market's going to react and you can kind of get blown up by it, right? Yep. So that's why we always recommend to have a stop order. Anyway, Kevin, that's my spiel for today. I'm happy to answer questions, or let's go from there.
Peter, man, what a pleasure. Always great having you on. Always great to see you. It was such a ball going to the city with you, going to the floor, seeing those billboards. That was what a time. We'll have to do it again.
We will.
So to touch upon, guys, on how to check the economic calendar in a simple, very quick way, what you can do with Apex is Apex gives you a TradeOvate account, which then lets you trade right on TradingView. And on TradingView, on the bottom right, they have a calendar icon. You're going to click your calendar icon, and you want to make sure on the top right over here for countries, it's usually set to top 20. We want to make sure to set it. There we go. We want to make sure to set it to USA only because we're looking for the economic data that moves our US market. So once we set it to USA only, we click apply. Guys, make sure you hit that like button for Peter. Always a pleasure having him on. Absolutely. You got it, Peter. Take care. Have a great rest of your day. Oh, wait. Let's bring him back on.
Out.
What was that? All right. Take care, Peter.
Bye-bye, buddy.
All right, awesome, man. Awesome having him in here today. Really great stuff. Next time we'll see if we get David Green in here too. So, guys, back to the economic calendar. What we're going to do, bottom right corner over here where it says calendars, turn on for the USA. And then you're going to come over to this icon right here. This is the only high importance icon. Once you turn this on, it gets rid of all of these random economic events that don't have that big of a move on the market. So once we're able to filter that out, we could see, okay, today is Wednesday. We had 8:30. We had GDP growth quarter over quarter. We have 2 o'clock, which it says 14 because it's in military time. Fed interest rate decision, and of course 2:30 is the press conference. And then like Peter mentioned, guys, Thursday at 8:30 we have core PCE price index. This does give us some volatility in the markets. So if we're looking at the markets pre-market, this is an hour before the New York session opens, we're going to want to either wait for this move to happen and wait for these reports to come in, or we could watch it and see how the markets react. But the one thing we never want to do going into some type of data event like this is be in a trade, because when this happens, we could get those very large spikes of volatility that could go in either direction without any rhyme or reason, and that's how accounts could get blown. Now, Apex does give us the ability, and we are allowed to trade going into news, but it's definitely not recommended. I wouldn't recommend it. Peter, David, they would not recommend trading into something like news. Peter mentioned before, these bring volatility. When something brings volatility like that, and it's coming along with uncertainty because we don't know which direction the volatility is going to come, then we want to protect our capital. As traders, our job isn't just to take trades. Our job is to protect our underlying capital so we're not blowing accounts and so we can remain consistent. Even if you're on an Apex account, your job as a trader is to protect that account, is to make sure you're only limiting your risks. You're not having bigger losses than you have winners. Peter and David, they have a fantastic rule. Never turn a winning day into a losing day. This is a great rule that can be added to your system, guys. As traders, there is no, I trade the opening range breakout, and that's my strategy. There's so much more to it. How was previous day high and low trading? How was prior day's price action? What's your essential risk management? How are other market internals trading? If we're trading the S&P 500, which is the ES, are we also watching the VIX, which is our volatility index? Because that will also give me an idea of direction, trend, and momentum on the ES and the NASDAQ as well. Guys, make sure to drop a comment on what futures you guys like to trade. Do you trade gold? Do you trade the S&P 500? Do you trade the NASDAQ? Something I wanted to point out, guys, is look at the strength we had on the dollar here. Now, this came once the U.S. sort of announced that we had that trade deal with Japan. Gave us a little light to say, okay, you know, the trade deal came in. It was definitely not a major 100% on tariffs. It came in solid. Markets reacted strong, and the dollar gave us a strong move. What happens when the dollar moves higher, guys? Well, gold tends to move lower. So now we could pull up our gold chart on our left-hand side over here and actually have it right here. And we see that gold has been crashing. Not crashing. We don't want to call this a crash. We want to be careful with how we word things. But gold has been selling off for the past few trading days, down 154 points from highs of last Wednesday. Now, that's a week to week. In 1 week, we're down 5% on gold to the downside, right? So that's a pretty big move, pretty significant. And we wouldn't want to try to take longs down here because then we would be fighting against the trend. So right now, guys, in my opinion, on something like gold, that would be GC, or if anybody is trading Forex, that's XAU, USD. Even if you don't trade Forex, guys, as somebody who's in the stock market industry, XAU USD is something that we see almost all over the place. So gold is a heavily traded commodity throughout many different markets and across the world. So it doesn't necessarily need that New York session volume. So when it comes to looking for a pre-market trade, or let's say you have a day job where you can't trade the New York session, you could trade gold because it does tend to give us pretty good moves overnight as well. Now, something to note with gold, we could come down to a lower time frame and start deleting some of these old levels that are no longer significant. This purple level that I marked out as a BML, that's a book map level. What that shows me is I use a tool called book map over here. This shows me order flow, and it shows me level 2, time and sale, depth of market, and it shows me those price levels based off of the heat map back here. Now, this is our current order book. This is where all passive orders are currently sitting. So if we were trading right here and we have strong red levels to the downside, that means these are strong passive buyers. If they're below us, they're passive buyers. They're sitting on the bid. Whereas there are price levels to the upside that we see right here. This is a price level of the ask. This was a strong aggressive seller sitting around 33.48. What happened? We came into it. We tried to fill it and we rejected it. So sometimes using these bookmap levels along with my own supply and demand and market analysis gives me some type of extra confirmation to take these trades. And as traders, guys, that's what we look to do too. We don't want to take a trade based off of one single confirmation. I'm going to go short because we're making lower lows. I'm going to go short because we broke below VWAP. We want to give ourselves multiple confirmations. Are we going short on a pullback? Are we going short because the momentum has been to the downside? I want to show you guys a trade I took on gold this morning in our community at Bullish Bears that I was able to net over a 5-to-1 risk to reward on, but it was just a 15-minute trade, 10-15 minutes. I held it. It chopped around a little bit, but it did end up continuing. Now, the reason I took this trade is we'll go to our replay mode, and the first thing I noticed was, hey, guess what? Let's go to replay mode. One more bar back. We just broke a demand zone. Now, for myself, guys, my structure to my trading strategy, now you guys should have some type of structure to your system. My structure revolves around supply and demand. So once I have my supply and demand zones, then I could add new key levels to it. Previous day high and low, opening price, maybe the gap fill if it's on ES and NQ. Now, I don't like trading the gap fill when it's on gold because gold doesn't necessarily have that New York session fall off with volume when the New York session closes. So we wouldn't necessarily use the gap fill trading strategy on something like gold. So for myself, what I saw was we were breaking a supply zone. And I also noted that for the past few trading days on gold, past 4 or 5 trading days, really, we saw since last Wednesday, we've been selling off. Every time sellers step in, they have a lot more momentum. Whenever buyers try to step in, they end up failing. So then that tells me we are in a bear trend. We do want to look for a short position because we want to trade with the trend. Trend is our friend. And then I was able to say, okay, well, now I could look for a pullback into my broken demand zone, because once I have a demand zone that breaks that same day, I like to use it as a supply zone. So I was able to line up on Bookmap a low volume shelf back then, and this was all the way up here, guys. This short position was all the way at 33.65. So all the way right up here, 33.65. Entry was, let's see, was it even higher? Let's see. 33.65.2, and I entered around 9:15. So it's funny, we exited, we were done for the day by our New York session open 9:30. So I followed my plan, I followed the system, and that's what worked out for me. So right over here, we were coming into this price level right up here. And every time we tried to move higher, we could see with Bookmap, these bubbles, guys, they aren't just there for looks. They're there to show us the significance of the volume at that price level. So if we were to get a breakout up here, this volume bubble should be a lot larger to show significant volume. But because each time we tried to break higher, our volume bubbles were small and insignificant, shows me volume is insignificant and we should look for a failure. Once we started getting that multiple times off of this 69 price level, I was able to take my short at 65, put my stop loss a little above that 69 area, and then able to let that play out. Now, if we were looking at the 1 minute time frame, that also lined up with the 1 minute fair value gap. Guys, using volume to give yourself confirmation for a fair value gap is huge, because if you're just marking out every fair value gap you see, you're going to end up with a chart that looks something like this, where you have one here, you have one here, you have one here. I mean, guys, this whole chart could be mapped out with fair value gaps, and none of them have real fair value to them, right? None of them are significant. Maybe this one held right here, but we never tested this one. We never tested this one. This one we broke through a few times. So you don't want to find a strategy where you're marking out 100 different zones and you have to sort of second guess all of them. You want to find a system that gives you an if factor. Think of an if factor of something like, if this happens, then this will happen. If we break my demand zone, then I will look for a volume imbalance for a short position. right? And that's how you can use those if factors along with your price levels to gain some confidence in your trading versus trying to second guess every trade you take. This was a great trade. I originally wanted to try to target the demand zone, but once we got this really aggressive move to the downside, I took profits right there because I was confident in the move we got. And I was also confident that, okay, at this point, we had a very strong move. If by chance we do want to pull back, this netted me a 5-to-1 risk to reward. I'm happy with calling it a trade there. Guys, if we're taking trades and we're netting, or we're looking to net a 6-to-1, and we cut it at a 4-to-1 or a 5-to-1, or we're looking for a 5-to-1 and we're taking it at 3 or 4-to-1, that we won't go broke like that. But if you're mapping out a 2-to-1 risk to reward and you're not letting that trade play out and you're taking it for only 1R, well, then you're really going to start skewing with your own risk to reward because you're going to be risking the same amount as that you're making, and you're going to sort of feel like you're chasing your tail, or you're going to need a really positive win rate at that point. When you look for things like a 2-to-1, even just as simple as a 2-to-1 and higher, which on ES would basically mean risking 5 points to make 10 points, risking $100 to make $200. It gives you the upper hand because you could win 3 trades in a row, be up $600, and then lose 3 or 4 trades in a row and still be up $200 or $300 on your account. This gives us the ability to, again, disconnect from any psychological barrier or connect we have to our account and our profits, and then we're able to further take that next trade with the right mindset that we're not connected to it. We're not coming off of 2 or 3 losses and we're red on the account. No, we came off of a few losses. We're following our system and we're able to take the next trade with confidence. Our next trade has nothing to do with our last trade, and our sizing should always be the same. Guys, we do have FOMC at 2 o'clock today, so beware of that. Let's check out the ES and NQ at the moment. We see we're pretty range bound today. These teal zones you see marked out up here and here, these were our highs and lows of our range, and I was able to mark these out, guys, at that New York session open and during that pre-market because the market gave us that range. It gives us the opportunity to spot these ranges. So I knew that, okay, guys, when I was speaking to the traders I trade with, the community, I said, okay, I'd only want to look for longs at the lows, and I'd only want to look for shorts at the highs. But if we fail to break out of either direction with strength, now what do I mean by breakout with strength? Well, I mean we break out and we close above and we have significant volume. Remember, guys, for price to move higher, volume needs to accept price at higher levels. If volume's not accepting price at higher levels, there's a good chance we end up failing. So think of it this way. Price comes up to 64.18, volume needs to come up to 64.18. If it doesn't, and only one of them meet that criteria, there's a good chance we fail. Now, a strong break would look something more along the lines of a break above. Maybe we get towards that 64.20 area, and then we come back towards that range and look to hold. Whereas if we were to have a break above that range, and it only breaks a couple points or a few ticks, well, there's a much better chance that that's a fake out, right? A lot of traders were looking for a new high to be taken out from pre-market. They took that break, and then what happens? They end up getting sold off on. So let's see. Look at that, guys. It's exactly what happened right here. We tried to break out, but let's look at the volume. We broke out here on this candle. We had volume increase, but then we had no volume follow through. Look at this candle was a pullback, and the volume decreased. This candle also tried to break out. The volume was decreasing. So eventually, with the volume lacking at these price levels and price still trying its best to move higher, this could have been where we were looking for a short position, knowing that volume wasn't supporting this thesis. Now, here's where different trading strategies come in play. We could have used the orb trading strategy. Now, the orb is the 15-minute opening range breakout. So we come to the 15-minute time frame and find our first 15-minute candle of the day. And you're going to mark out the high and you're going to mark out the low. That gives us our ORB, opening range breakout. So what we saw so far was we held that orb low right off of our gap fill, and we ended up breaking our orb higher. However, on that breakout, now we know a lot of traders take an orb breakout and they go to target a previous day high. So they might have taken this break right here, put their stop loss at the orb low because they were entering on the orb break, and they might have been targeting previous day high, which that's a 3-to-1 risk to reward. That's an okay trade to take. Definitely no problems with that. However, it was the volume and the breakout that showed us we weren't holding. So what I would like to see, right, what I always like to see is good higher time frame confluence, right? What do I mean by that? Well, I would mean if we were breaking out here, then I would like to see, now let's pull back, just like we're breaking out, just like we're real time seeing this breakout on the ES, on the S&P 500, and we're saying, okay, we're breaking out of this 64.17 area, but we wicked it once, now we're on the 15-minute and we wicked it again. That's again a huge red flag. Wicks show me, if they're to the upside, that buyers failed to continue us higher. Sellers were able to step in up here and bring us lower. So again, that would be a red flag on any shorts. Let the next candle play out. We see one more wick through that level. Prices finally starting to return back to the downside. Now again, this could be where we're looking for that reversal trade to target our orb low, because we're looking for a double break. When it comes to the orb trading strategy, guys, it tends to have a double break way more often than it has a single break. So here's orb on a 15-minute time frame. This platform is called Edgeful. And basically what Edgeful does is it gives us a report as to which strategy or system we're looking at. So we could do the orb, the performance by day, green and red days by weekday, previous day's range, gap fill. There are tons of different reports to choose from. For this instance, we're looking at the orb, and we see that for the past 5 trading days, it gives us a streak. So I don't have to go and back test and figure out how were the past 5 trading sessions. It tells me on the 23rd, we had a double break. 24th, we had a breakout, a double break, and then yesterday we had a breakdown. Okay, well, the orb is a great strategy to use, especially if we're in range-bound price action. So once we start to see that we're failing again to the downside, this could have been a very good selling opportunity to target that orb low. Because again, we're trading our range. When we're trading, guys, we're not trying to take those big breakouts. We're not trying to go for major, huge moves. Our goal as traders is to look and see if we could find the range. Right now, our range today was spotted on the 15-minute time frame. Sometimes we might not spot our range until we zoom out to maybe an hourly time frame. It always depends, but that's why it's important to do some type of technical, and I always call it time frame analysis. So right now, this is where we're currently trading at. We're trading back within the highs of our range. I would mark this out as a resistance point because look at how price reacted every time we were in it. So now what we could do is we could use our bookmap tool and see if there are any sellers on the S&P 500 up here near the 64.18 and 64.19, which I see on bookmap there are. We have some passive sellers sitting right up here. So again, I wouldn't look for longs on the break here. This is an area that I would possibly even look to see if sellers could step back in and help push us back lower. Even if we were looking to trade this range, right, we would want to sell the highs and buy the lows. So at this point, because we're near the highs, we'd want to sell the highs, which would be a short position, and target the lows. Now, what's really cool, guys, with TradingView's short position tool is it does the math for you for how many contracts you can risk on your trade. So right now I put my short position tool up. Let's say it has my entry at 64.1675 and my stop loss at 64.19.5. It says I could trade 1.8 contracts. Now we can't trade 0.8 contracts. However, we could trade micros. So if anything, I wouldn't trade 2 minis. I would trade 18 micros. That way I'm able to scale into my trade and also scale out of my trade. Once you see that it's under at least 2, that's when you would want to go to micros so you're able to really manage your risk. Once it's like, if it's like 1.5 and I go in with 2 contracts, well, then my initial risk of 250 that I have is going to be much higher because now I'm risking more contracts than the tool told me I can risk for that stop loss. So just something to consider, very important, very helpful, and you can do that with the short position tool and the long position tool. Check this out, right? So long position, you double click, you're going to create your account size. So let's say you're on a 50K Apex account, so 50K, that will be your default or default USD. Lot size, we want to keep this to 1 because the tool itself is what does the math for us. So keep lot size to 1. Risk, if you're on a 50K account, as I mentioned before, max risk you should really be looking for is, I really wouldn't go higher than 250, but 150 to 200 is really a safer zone when it comes to risk. Let's see if we can pull those slides up and I'll show you guys exactly why. So let's see. So our 30% rule, here's our 30% rule on our accounts, and this is why. So our 25K account, guys, your trail stop is $1,500. So if we were trading a personal account that was starting out at $1,500, there's no way we're risking $450 on a single trade. We would be blowing the account in a little over 3 trades. That would be way too heavy in sizing, and then you're going to end up finding yourself buying another account and another account. It's not worth going in those circles. 50K account, your trail stop's 2,500 with your max trail down of 30% of 750. Again, guys, it's not, we shouldn't, if we have a $2,000 account or $2,500 account, we should not be risking over $750 per trade. If we had our own account for $2,500, we'd maybe be risking $200 a trade, $150 a trade. And that's with knowing that we could blow the whole account. If we were trading our own account of $2,500, we would need to make sure that we stop trading on the account once it hits 1,000. So our trail stop's really only $1,500 on our own account. So that's also where a prop firm like Apex Trader Funding has so many benefits to it versus trading your own capital, right? You get your feet wet when trading, you understand some type of psychology to it, you create a system around it, understand supply, demand, support, and resistance, opening range breakout, gap fill trading strategy, whatever strategy floats your boat, whatever system makes you comfortable that you're comfortable with, whether you're a scalper who wants to be trading on like a 1-minute chart, you're a day trader who wants to hold it on the 5-minute and 15-minute chart. Take your time, trade what works for you, and just stay patient. The market will come to you. And that's where pre-market prep is so helpful, guys, because I give myself a whole hour before the New York session opens. I could take a pre-market trade on gold if I look for one and I find one. I'm able to look at my price levels before price could even get to them. What that does is it gives me the benefit of the doubt to say, okay, I want to look for a reaction to price level A, B, and C. Right now, we're trading in the middle of A and B, so I could wait until we get to one of those destinations. Whereas if you don't come up with a pre-market plan, every time the market moves, you're going to think it's continuing in that direction, and you're going to try to chase it, get stopped out, think you are wrong, try to reverse it, go the opposite direction, and that's how accounts get blown fast. So guys, examples of the 30% rule, and a lot of traders get worried about the 30% rule. In my opinion, I always say it should be the opposite. We should be thankful for this 30% rule because it helps keep us consistent. It gives us guidelines to follow, right? Now, nobody's going to tell you what rules to follow as a trader. I could certainly help you. I do mentorships. You guys check out my websites, tradingpioneers.net. For Benzinga, if you're here on Benzinga, you get 50% off your first one-on-one mentorship, so definitely check that out. But I can't pull the trigger on the trades for you. I can't tell you you have to follow this rule. That's all up to you. But with that being said, Apex forcing some of these rules, like a 30% rule, that turning into a 50%, they really don't have much rules outside the 30% that we have to follow, other than the trading 8 trading days before taking a payout. But again, these are rules that we should be following, even if we were on our own capital, right? And if that's the case, complaining about these rules, it's not even worth it, guys. It's silly to complain about them. If you're trading so here's an example, guys, of the 30% rule. So if you're trading a 50K PA account and your best profit day was 2,000, which sounds huge on a 50K account, right? Because our trail stop before we saw we should only be risking $750. So if we make $2,000 in a single trading day, well, okay, we might have just broke that 30% rule temporarily. Now, guys, what you would do is you would take that 2,000 or whatever your best trading day is and divide it by 0.3. What that does is it does the reverse math for you on what your total P&L has to be once you go for your payout. So what my P&L on this 50K account would be, if I was up 2,000 on my best day, would have to be $6,667. That is not a big deal. If my best day was $2,000, I should be able to make it to $6,600 within another 7 trading days, no problem. Unless I went full port to make that 2,000 and I can't do it again, which is where Apex says, listen, that's not a consistent strategy. We don't like that. That's why these rules are in place, guys, to show that you could consistently come into the market, make some money and go out of the market with that money. Not that you're going in, you go too heavy sometimes, you pass your account, you go too heavy again on a funded account, you make nice profits, and then you sort of chip away at those profits and barely make it there again. That's inconsistent, and that's not something that we could repeat. As traders, our goal is to find repeatability in the market. Once we find something that we see happens often, that we could take advantage of, that's what we add to our system. So let's say the 6,667, that's what your total profit should be to stay within the rules limits. If I hit that 8 trading days and my account's only at like $6,000 and we're off by 600, don't request the payout. That's probably going to get denied, but take the extra day. Take some time to keep trading. You could then continue trading, make that extra 600, and then go for the payout. There is no exact, you have to request it after 8 days. No way, guys. So here are your maximum payouts per each account size. 25K account, most you could take out is 1,500. 50K account is 2,000. 100K is 2,500. 150K is 2,750. 250K is 3,000, and 300K is 3,500. So something else I'd like to point out, guys, is if you're going for an Apex account and you're consistent enough where, okay, you're on your second or third payout on the same account, if you're on a 50K account, you're usually not better off going to a 250K because that only gives you an extra 1,000 in your payout, and it's still giving you over 200,000 more in account size. What you're better off doing is getting 4 more 50K accounts, because then you're looking at 2,000 plus those 4 other accounts. That's $10,000 in payouts every 8 trading days. That's huge. Whereas if you did just one 250K account, that's only 3,000. So sort of a less is more and more accounts is more situation. Whereas a higher account doesn't necessarily mean a much higher payout. Now, if you were on a 250K account and you were on 20 of them, that's another story, right? Then you're looking at, well, 3,000 times 10 is 30,000. 10 times 2 is 20, and that brings us to 60,000. 60,000 in payouts every 8 trading days. That's the max. Well, I guess the max would be the 300K account, where it's 3,500. And again, that's the max you could get payout wise, but on these higher accounts requires you to hit a much higher target before even getting to those payout windows. So again, we're much better off to get to a payout faster and more consistently, and even a bigger payout, trading 50K accounts and trading them across multiple accounts. Guys, make sure you hit that like button. If you learned something from Peter, drop some W's in the chat for Peter too, man. It was such a pleasure having him on. There is no maximum payout after the 5th payout. So up until 5, it's 2,000 per account on the 50K. But on payout number 6, let's say you created 30,000 worth of buffer, you're able to take out that full 30,000. So really a great company. They do better when their traders do better, and that's why these rules are so great, and that's what makes Apex so much better than any other prop firm. So guys, make sure you hit that like button for Peter. Make sure you hit that subscribe button for Apex. Show some love for Benzinga, and follow us on Instagram is Benzinga and Trading with Kev. And I will see you guys next Wednesday. Take care, everybody.